Hello everyone. Are you all looking this man who is looking very sad? I asked him what has happened. He told me that he wants to trade in a shares, long-term shares and mutual fund, but he doesn't know what has the tax implications on the same. So I advised him not to worry. Yaar. In today's videos, I am going to discuss with the same topic, that is taxation on the long-term shares and mutual funds. Please watch till the end and subscribe to my channel here. So, if you are also worrying with the same, that is taxation on long-term shares and mutual fund, please subscribe to my channel. Please watch this video till the end. This is Abhijith Acharya. Welcoming to today's video. If you are not subscribed yet, please subscribe to my channel so that you will be also more benefited to interesting videos. And please like the videos and share the videos to the n number of users who are also worrying with the same topic. So, welcoming all for the today's session. Let's discuss meaning of long-term capital assets. I will first discuss about the meaning of the long-term capital assets with regard to the shares and mutual funds. Okay. Securities listed in a recognized stock exchange in India or units of equity-oriented mutual fund or zero coupon bond. If these classification of shares or assets are held by you for more than 1 year, these assets are considered to be a long-term assets. Second category, unlisted shares, which are not listed in the recognized stock exchange of India. If these assets are held by you for more than 2 years, then these are also considered as long-term capital assets. Third category, other than equity-oriented fund, for example, debt-oriented fund, or any other asset, that is units of business trusts. These assets are held by you for more than 3 years, then these are also considered as long-term capital assets. So these are the definitions. We'll now move on for the next important topic, that is tax rate applicability. Okay. First of all, equity shares listed in a recognized stock exchange in India where STT has been paid at the time of sale or at the time of both at the time of sale and acquisitions of those assets, or units of equity oriented mutual fund where STT has been paid only on at the time of sale. Then tax rate applicability is 112A under section 112A at the rate of 10% over and above the 1 lakh rupees of your capital gain. If your capital gain is 1,30,000, only on 30,000, 10% will be liable as a tax rate under capital gain under section 112A. For that, no indexation benefit will be given. What is indexation benefit? I have already discussed it in my earlier videos of sale of land. If you have not watched that video, please watch that video. I have also given the link of that video in our description section. What is I will just narrate in brief what is indexation benefit, because 10 rupees of 1 year back is not equal to 10 rupees of today. In order to given the benefit for an SSE, our income tax act has given an extra benefit, that is 10 rupees has given one extra index, that is cost inflation index. In order to meet the inflation rate, that 10 rupees is not equal to 10 rupees of today. In order to given that 10 rupees should be multiplied by the CII, that is cost of inflation index. You will be in a better position when we understand, when we see our example. Okay. Next, no chapter 6A benefit will be available. That is ATC also, ATD also, no deduction will be available in respect of the long-term capital gain. No rebate under section 87A will be given even though his long-term capital gain is below the 5 lakh. Okay. Next criteria, unlisted shares of company. What is the tax rate applicability? 20% with the indexation benefit will be given. Indexation benefit will be given, and on long-term capital gain, 20% is a tax rate. Listed securities except units or debenture. Okay, zero coupon bond. What is the tax rate? 10%. Actually, there are two rate applicability, that is 10% without indexation or 20% with the indexation, whichever is beneficial, that is where income tax act will be less, those benefit will be given to a taxpayer. That is 10% without indexation or 20% with indexation, whichever is beneficial to an SSE. That tax rate will be applicable. To be continued, listed debentures on bonds. For that, 10% without indexation, no indexation benefit will be given. Unlisted debentures or bonds which are not listed, 20% without indexation. Understood? 20% without indexation. Units of business trust where STT has been paid at the time of sale. For that, same criteria, section 112A applicability, 10% over and above the 1 lakh rupees. We have already discussed it in our listed equity shares. And no indexation benefit will be given. No Chapter 6A deductions will be allowable. No rebate under Section 87A, even though the long-term capital gain from units of business trust is below 5 lakh. Okay. Next, units of debt-oriented fund, for that 20% with the indexation benefit will be given. Indexation benefit will be given. Okay. These are the tax rate applicability. We'll now move on to the some key points applicable for long-term shares and mutual funds. What are the key points? First one, deduction under chapter 6A will not be available. I already discussed it in my two criteria, but for any long-term capital gain, chapter 6A deduction will not be available for an SSC. In case of residential individual, this is important. If income other than long-term capital gain mentioned under section 112A, short-term capital gain 111A is less than basic exemption limit. In simple, income from other sources or income from salary, income from any other head is less than the income specified under these sections, that is 111, 112, 112A, 111A is less than basic exemption limit, then that unutilized basic exemption limit can be used against this income also. First, that should be set off against other income. Next, even though any balance is remained, those unutilized balance will be set off against these sections. Okay, you will be in a better. You will understand this sentence in our next example. Okay. Next, long-term capital loss can be set off only against long-term capital gain. It cannot be set off against any other income. It can be set off only against long-term capital gain. Okay. Short-term capital losses can be set off both against long-term capital gain and short-term capital gain. Okay. Next, long-term capital gain loss. Sorry, long-term capital losses can be carried forward for the next 8 assessment years. Can carry forward till the next 8 assessment years. Okay. Next, such a capital losses can be carried forward only, this is very important, only when ITR, that's income tax return, has been filed within the due date. That is mentioned under section 139, subsection 1. That is for individual 31st July 2023 for financial year 22-23. Okay. Such capital loss can be only carried forward. If you file after 31st July 2023, those laws cannot be carried forward. This is lapsed, absolutely lapsed. So these are the theoretical aspects. You will be in a better position to understand these concepts when we see a best example. I have given one best example where I have included all the criterias of long-term shares and mutual funds. You will be in a better position to understand and to apply those theoretical aspects in your practical life also. This is the practical example. Mr. A has entered into the following transaction during 2022-23. This is the current financial year. First one, he has sold listed debentures of DEF some company for 3 lakh. Its cost of acquisition is 1 lakh. Its date of purchase is during 21-22. Sold listed shares of company for 2 lakh on which STT has not been paid. Cost of acquisition is 80,000. Purchase year is 21-22. Sold listed equity shares of Wipro company for 2.5 lakh. Its cost of acquisition is 1 lakh. Its date of purchase is during 21-22. Sold units of business trust, that is REIT, Real Estate Investment Trust, for 2.3 lakh. Its cost of acquisition is 1 lakh. Date of purchase during 1920. He has sold debt-oriented fund mutual fund for 2.6 lakh. Its cost of acquisition is 1.6 lakh. Date of purchase is during 1920. Sixth, he has sold unlisted debentures for 2.1 lakh. Its cost of acquisition is 1.8 lakh and its date of purchase is during 1920. Last, he has sold unlisted shares of company for 4 lakh. Its purchase cost is 1 lakh. Its date of purchase is during 2021. These are all the transaction he has made during 21, 22, 23. Great. Compute his taxability for assessment year 23-24, that's due date is 31st July 2023. Provided CII, I already mentioned, cost of inflation index 331 for 22-23, 317 for 21-22, 301 for 2021, 289 for 19-20 years. We will now see the solution for the same. First, computation of total income for Mr. A for assessment year 23-24. First, listed debentures, sale considerations already given in the questions, that is 3 lakh. Its cost of acquisition is during 21-22, 1 lakh. No indexation benefit will be given. Long-term capital gain specified in section 112 subsection 1, that is 2 lakh. Second, listed shares where STT has not been paid. Two options will be given: 10% without indexation, 20% without indexation. Whichever is beneficial for an SSC will be considered as a long-term capital gain. First, sale consideration is 2 lakh, already mentioned in the question. Option 1, cost of acquisitions without indexation, that is 80,000. Long-term capital gain 1 lakh 20,000 on that 10% for because without indexation, that is 12,000. Option 2, with indexation 80,000. In 80,000 of 2021-22 is not equal to 80,000 of today. So in order to provide a benefit, I already discussed it. In order to provide the benefit, that cost of acquisition should be multiplied with the cost inflation index, that is 331 of current year divided by 317 of the 21-22, which comes to 83,533. That's the cost as of today. Okay. Then long-term capital gain will come to 1,16,467. Next, tax on above at the rate of 20% because indexation benefit has been given for an SSC. So 23,293 is a tax amount without cess. Okay. So whichever is beneficial, 12,000 will be a beneficial for, and hence long-term capital gain will be considered as 1,20,000. Okay. Next C. Listed equity shares where STT has been paid both at the time of sale and acquisitions of a shares. Sale consideration is 2.5 lakh. Cost of acquisitions without indexation 1 lakh. Long-term capital gain 1 under section 112A is 1.5 lakh. Next, units of business trust. Sale consideration is 2.3 lakh. Cost of acquisition is during 1920 is 1 lakh. No indexation benefit will be given. LTCG under, that is long-term capital gain under section 112A, that is 1.3 lakh. Next, debt to oriented fund, mutual fund. Sale consideration is 2.6 lakh, already given in the questions. Indexed cost of acquisition, because indexation benefit will be given. I already discussed it in our introduction or explanation part. It has been purchased in 1920. So 1,60,000 of 1920 is not equal to 1,60,000 of today. So in order to provide indexation, inflation, in order to meet the inflation rate, cost of inflation index should be multiplied to 1,60,000. That's the cost of acquisition. That comes to 1,83,253. It's absolutely right. 1,60,000 of 1920 is not equal to 1,60,000 of today. So it is equal to 1,83,253 as per our Income Tax Act. So LTCG comes around 76,747. Okay. Next, unlisted debentures. Sale considerations 2 lakh, 2.10 lakh. Cost of acquisitions in during 1920 without indexation 1.8 lakh. Long-term capital gain is come around 30,000. Okay. 2 lakh 10,000 minus 1 lakh 80,000, that comes to 30,000. Okay. Unlisted shares. Sale consideration is 4 lakh. Indexed cost of acquisitions. Indexation benefit will be given. 1 lakh into 331 divided by 301. 301 is a cost of inflation of during 2021. 1 lakh of 2021 is now equal to 1 lakh 9,967. If you deduct from 4 lakh, long-term capital gain come around 2 lakh 90,033 rupees. If you add all the long-term capital gain, gross total income will come around 9 lakh 96,780 rupees. This is a gross total income. Now we will see the tax amount which Mr. A needs to pay during assessment year 23-24. Tax computation. LTCG not covered under section 112 section 1 and section 112A. This is a specified section which we will discuss in the next slide. First, long-term capital gain from debt to oriented fund 76,747. You can see in our previous slide, that is 76,747. LTCG from unlisted debenture 30,000. LTCG from unlisted shares 2,90,033 rupees. If you add those three, 3,96,780. These are all not considered under specified section, that is specified under section 112, 1112A, 111A, and hence basic exemption limit will be deducted from this income. So 2.5 lakh will be deducted, and hence LTCG after basic exemption limit is 1,46,780. Okay. Tax on above at the rate of 20% is come around 29,356. This is considered to be one. Next, LTCG under section 112A, specified section, listed equity shares where STT has been paid 1.5 lakh, unlisted business trusts where STT has also been paid, that is 1.3 lakh. Total comes around 2.8 lakh. Up to 1 lakh, no tax will be leviable. Over and above 1 lakh, for the excess amount, 10% will be leviable, that is 18,000. Then, long-term capital gain specified in section 112 subsection 1, listed shares, STT where STT has not been paid, 1.2 lakh, listed debentures, 2 lakh, total comes around 3 lakh 20,000. Tax on above at the rate of 10% will come around 32,000. If you add 1, 2, 3, total tax amount comes around 79,356. If you add the cess of 4%, it comes around total taxability is 82,530 rupees. This is the tax amount he needs to pay for financial year 22-23 with respect to assessment year 23-24 within 31st July 2023. Okay. These are all the simple brief explanation with regard to the long-term tax implication on long-term shares and mutual fund. If you like the video, please like the I button and subscribe to my channel, and share the video to the n number of users who are also worrying with regard to the tax implications on the shares and mutual fund. If you have any doubt with regard to the same, please mail to me in the following mail ID, and actually you can also WhatsApp me in the below given phone number. Thank you for watching till the end. Bye bye.